All right, good evening, everyone. Here is another weekend in review by myself, yours truly, Tim Davis. Today is February the 26th, 2022, and it is today is a Saturday. And we know that we had a pretty, eventful week this past week with the invasion of Ukraine, causing more volatility to the market. The wild rebounds that the market has went through. So, um, and some negative in the market, some positive in the market. So the market had a chance to regain a lot of its flavor back on last week. Okay, keep that in mind as I go through the technical analysis by looking at the different charts that show us breadth of the market and also take a look at the individual indices themselves so we can come up with a synopsis of what we could be in store for in the near and far future. So what I want to start out this weekend with is taking a look at the breadth of the market. So the first tool I like to take a look at is the SPXA 200R, and we're going to take a look at a daily chart of that tool along with a weekly chart as well. So here is the SPXA 200R. For those who are not familiar with this tool, it is a tool that tracks the percentage of S&P 500 companies that are trading above that 200-day simple moving average. And I like to pay close attention to this tool because this tool gives us a lot of insight as to what is the sentiment of the overall market. What I've done with this tool, because it tracks percentages, it's not price. So the numbers that you see here with my cursor, that is percentages and not price. And you see the percentages on the right hand side too. So right now, as of Friday, when the market closed, looks like we settled around just about 46% of the S&P 500 companies was still trading above their 200-day moving average, meaning that over 60%, or close to 60%, about 55% of the overall S&P stocks were trading below their 200-day moving average. So that just shows us that even with the rally that we've seen on Friday, we still had the majority of the stocks in the S&P 500 trading below their 200-day moving average. Now, with the tools that I use to track this, I still use some the 50-day, the 200-day, and the 20-day moving average, just to give me a general idea of direction or current on the current percentage direction, as well as trying to spot where support resistance is. Now, if we look at the bottom here towards where the force stochastics is and my RSI, you see that they're both starting to turn up. So that just leads me to believe, and with the two green days we had on the past 2 days, leads me to believe that we could still see some upward movement in the overall market in the near term. Now, I say in the near term because there's still a lot of overhead resistance. We still have the 20-day, which is this yellow line, 20-day moving average to conquer. And then next to above that, there's a white long line that I drew here, which is an area of resistance. The percentages will have to conquer that as well. And then we have the 50-day moving average above that. So there's a lot of resistance that this percentage is going to run into, which more than likely is going to act as a strong ceiling and will probably push the percentage average back down. So beginning of next week, we could continue to see upward movement in the overall breadth of the market as far as the overall market is concerned. So we could see some up movement in the overall markets starting next week. Here is our weekly chart. And as you can see, if you look down in the full stochastics and the RSI and the winners percentage, they're all pointing up as though they want to continue to make a move back up to the upside. Now there is some resistance that the weekly chart is going to run into too as well. It looks like this 20-day, which is the yellow line here, it's like it is really bearing down strongly on the candlestick. So this is probably going to act as a strong area of resistance. So we may see this percentage tool continue to trickle higher, but as we approach these resistance levels, this white line here and the 20-day, it's probably going to run into a strong level of resistance and probably not be able to break through. So let's see how that pans out over the next week. But the beginning of the week could be another strong start to the week. All right. Now I want to switch to, before we start to take a look at the VIX, because that's what I want to look at next. Before I do that, I want to draw your attention to this tool, because this also is a very, very good tool that tracks the overall breadth of the market. And if you want to get access to this, and if you can't just go to the W, because I know somebody told me they was having problems just trying to find it by going to WSJ.com, trying to find this particular tool. What this tool does is it gives you the new 52-week highs and lows as it relates to the New York Stock Exchange and the NASDAQ. If you are a friend of mine on Twitter, you can come to my Twitter page. See here. And at the very, very beginning of my Twitter page, I have this pinned to the top of my Twitter feed. If you just click on that, you will be able to get access to that tool as well. All right. And again, if you show you my Twitter handle again, it's right there. It says Tim D. And if it doesn't say it doesn't say at God's Child Tim, then it's not me. So at God's Child Tim, in order to get to my Twitter page, and that WSJ tool link is pinned right to the beginning of my page. All right, now, so I try to check this several times throughout the week, and probably a couple times during the day when I get a chance to glance at it, because what it does, it tracks the overall, new highs and new lows that are being created, and this helps you also get a gauge as to what the breadth of the market as well. Also gives you another confirmation of the breadth of the market, where is most of the action and happening at. Now with Friday, a lot of folks, looking at it, wow, it was a huge rally. We got to be starting to create more new highs than lows. Well, let's take a look. So the first one we look at, you got your two choices here, NYSE, which is New York Stock Exchange, and the NASDAQ. We're gonna look at both. And the first section here of this table, it shows where this dark highlights are, dark black highlights. It says new 52-week highs. So it shows you how many new 52-week highs were created at the end of the business day on Friday. 44 new highs for the New York Stock Exchange. And let's scroll down about halfway until this section ends, and then we'll see new 52-week lows. Look at that, 73. Okay, a little under 2 to 1. So the new highs are trying to catch up, but it's still a ways off. We have 44 new highs created, but 73 new lows. So the new lows are still outweighing the breadth of the market overall when it comes to the New York Stock Exchange. So it leads me to believe that we are still showing some weakness beneath the surface of markets, even with this big rally we seen on Friday. Let's switch over to the NASDAQ. Here we go. For the NASDAQ, the close of business on Friday, we have 50 new 52-week highs. There were 50 created. Now let's scroll down. And as far as new 52-week lows, there was 142. So that's almost a 3-to-1 ratio. So that just shows me that even with the big rally we've seen on Friday, the breadth of the market is still having some struggles beneath the surface. And until that changes, I feel more comfortable selling these rallies. All right. Now let's go back here. See where we could be headed over the course of the next week or so. All right, let me look at the SPXA one more time, because I want to show you guys the monthly chart. Show you guys the bigger picture. So here's a bigger picture. And I've been drawing this out to track it back all the way back to 2007. And what you'll notice here is that I drew Pacific trend lines on these trend lines is where I've seen these percentages bounce at over the past 20 years or so, past 15 to 20 years. And I wanted to point out that we recently got a bounce right at one of the trend lines that I drew right there. I just highlighted. So we got a bounce there. Now, what I'll be looking for next week to see if this percentage can get back above 50. If we can get a sustainable move back above 50 and head back up towards 60 to 65, then we could be looking for a longer term rally back up to the upside. If we cannot break above 50 in a big way, and I'll break back above this blue line, which is my 50-day moving average, then more than likely we're going to get muted and the rally is going to get sold and it's going to push lower again to test this trend line at the bottom here, which is right around 29%. And if we, by the end of the week next week, if we test this 29% level and we break it, we could be heading down to 0. And that's when I'll definitely start looking for some support for sure for a sustainable move to the upside. So we're going to see how that pans out next week. Again, if we can break back up a 50% on this monthly chart, then that'd be good for the bulls. If not, then the bears are going to come back with the vengeance. All right. Now let's take a look at each one of these indices one by one. Start with the S&P 500. And since I have a weekly chart up here, we're going to start with the week, taking a look at this weekly chart here. So if you look closely, you see price action on the weekly chart is now trading below the 50-day, below the 20-day moving average, which is this yellow line here. Look down below at the 4 stochastics. You see we almost got a buy signal where it seems like we're about to turn up. So we got to watch that very carefully, that we could see a continuation to the upside in overall price action. And we can get a test of this 20-day moving average, which is what I expect to see next week on a weekly chart. Here is our daily chart. You see price action is heading back up to test this 20-day moving average. And if you break back above there, I'm not really expecting huge moves to go much higher. We could see a move higher, but then it's going to run into some levels of previous resistance. You got one here. We could see a test of that level. And we have one just below that level. Oops. So we have some resistance right around this level too as well. So those are some levels that I'm going to be watching for next week. I definitely think we could probably break above the 20-day, just a tad, and maybe test some of these other levels of resistance on the S&P towards the beginning of next week. And if we take a look over here, I'm going to switch to a daily chart of the S&P. You see how S&P is hovering just below that 50-day moving average. We could see the S&P break back above, below that 200-day moving average. We could see the S&P break back above it and attempt to test the 50-day, which is where I think we will really start to see a rejection. So that's how it pans out. But right now, the S&P is right below the 50-day. If it breaks above right below the 200-day, if it breaks above that, it could run up to test the 50-day, which is where I think we could see a rejection and head back down to the downside. Folks, if you take a look at the longer term chart, I'm going to show you how, even though with these big rallies, the market is still under pressure longer term. Here is a monthly chart of the S&P. It's a longer term monthly chart of the S&P. I want to highlight a couple of things on these monthly charts because the monthly charts still show a lot of weakness that's coming into our market, and it looks like it could be sustainable. So get rid of this, clean this up just a tad. So here's our monthly chart. 2 red months in a row, and now price action hit that 20-day, and the bulls are fighting back. But it's going to be a heck of a fight. That's why volatility is going to continue to be strong, because we're going to see these wild swings. Look at the full stochastics on the monthly chart. It is just starting to dip out of overbought territory. Look at the wins percentage. It is dipping out of overbought territory, and RSI out of overbought territory. And it looks like overall, longer term, looks like we still want to head lower. So these rallies are probably going to be sold. Just got to know where they're probably going to be sold at. Again, here's our weekly chart. It's like it is just starting to show a possible sustainable weakness. Let's switch to my weekly chart where I can take a look at the 50-day and the 20-day. So here's our 50-day moving average. Price action, drop a load on the weekly chart, and look, the bulls push price right back above it. So this range right here on the weekly chart is going to be a range that I'm going to be watching for next week between the 50-day and this 20-day. We could see the S&P rally back up towards this 20-day. It's right around 44.86. So that is a possibility. Or we could just see it's hover right around this 50-day where, this 50 where it is now, and come right back down. So we got to pay attention to that next week. I think overall, we could see, a short bout of another rally, continuation of the rally, and then run into some resistance and then come back down to test the previous lows, probably by, in the next week or the beginning of the following week. So keep that in mind. I still think this overall market is still longer term is showing more pain to come after these rallies in the midst of a bigger downturn. All right, let's take a look at the Dow Jones. Here's our Dow Jones, same scenario. Daily chart of the Dow Jones, as you can see. We have price action hit this low and reverse back to the upside. Now we are heading back to make an attempt to test the 200-day and the 50-day moving average on the Dow Jones. So again, there's still a lot of overhead resistance, even with those big rally moves we've seen on Friday. There's a lot of overhead resistance that's coming up. And keep in mind, even though we had a big event this past week, which was the Ukraine invasion of Ukraine, there's another big event coming up this week, folks. That is the Fed speak on Thursday. So Wednesday, Thursday, I think that's when the Fed will make their announcement. That is probably going to be another market moving event that could cause the rally in this market to be stalled and run into resistance at the 200-day and the 50-day and get a reversal. So if for some reason the Fed don't find a way to push price action back above all these moving averages, then it's more than likely going to get price action going to get sold off as it hits these moving averages and pull back. That's the Dow. And let's go take a glance at the NASDAQ. Is the NASDAQ same scenario? And NASDAQ is a little weaker. It is just about to approach its 20-day moving average on the daily chart, which is where it was going to run into resistance first. And if it can't sustain a move there, it's going to come right back down, folks. One thing I want to point out here is look at this move on the daily chart of the NASDAQ, where the blue line crossed below this red line. That is considered a death cross when you have the 50-day moving average crossing below the 200-day. So we have resistance here at the 20-day, and we'll have resistance up here at the 50-day. So between this range is where we're probably going to see some resistance coming in strong for the NASDAQ and a possible reversal back to the downside. Here's our Russell. Russell is edging ever so closer back up towards that 50-day moving average. So it's already pushing through those 20-day. So the Russell, I wouldn't be surprised to see it go up just a little bit more, maybe not all be up to that 200-day, that 50-day, and probably find some resistance right around here and then come right back down. So pay close attention to that, folks. I don't think these rallies are beginning a new bull market. So keep that in mind. I think these rallies are going to run into resistance at these moving averages, and they'll probably get sold off. Now, for some reason, the market finds a way to break back above the 50-day and the 200-day on these moving averages on the daily charts, then that could be a new start of something new. But right now, the 200-day and the 50-day moving average on most, if not all three of the major moving averages, major indices, we're going to run into resistance as we approach the 50-day and the 200-day again on a daily chart. So keep that in mind. A couple more I want to take a look at. Let's take a look at the VIX. Here is the daily chart of the VIX. All right, been tracking this movement of the VIX. The VIX did manage to break out of this triangle and came running right back down. However, VIX is still above on the daily chart. We're still above the 20-day, we're still above the 50-day, and we're still above the 200-day, which is pretty good for for the VIX in general. So we could see the VIX continue to push lower and maybe even push back through that 20-day, but it's going to find possible support right around that 50-day, which is around 25 bucks. So pay close attention to that. If we continue to push lower, that 50-day moving average is probably going to act as an area of support for the VIX. All right. Let's take a look at crude oil. All right. Here's crude oil. Started to show some weakness on last week, so would not be surprised if crude oil finds a way to continue to pull back. And if it does drop below this 20-day moving average on the daily, I would suspect that crude oil will probably drop down to the 50-day and try to find support there. That will push it back down to about 85 bucks. So pay close attention to that, folks. Depending on what happens with grain next week, but we could see crude oil continue its pullback, maybe back to the 50-day moving average before taking a longer term move. A bigger move higher. Looking at the weekly chart of crude, look at our wins percentage and full stochastics is showing overbought territory, so we could again see a pullback just below some of these levels of resistance. And here is levels of support. So this price action right here will probably act as a good level to keep an eye on. So we made it up to this level before. We could see price action come down and test this level, which is right around the $85 level, $84 to $85 level, before crude oil decides if it wants to bounce here and go higher again. So pay close attention to that. All right, here's gold. Gold did exactly what I thought it would do. Found a way to break out of this long-term triangle pattern, a long-term wedge pattern that it's been in for quite some time. Broke out of that, and it's starting to pull right back towards it. Now, I still think gold has a lot more room to run, which is why I'm going to be paying very close attention to the moving averages. As see this yellow line, you can barely see it, but that's my 20-day. As it starts to rise, okay, and price action pulls down, I think that 20-day is going to act as an area of support. So we could see a little bit more move pullback in gold. Pay attention to that. But as the moving averages, the 20-day and the 50-day start to rise, we could see a strong bounce from those levels for gold. All right, silver. Silver also had a nice move up on this past week. Still in that range. This tight range has been in for quite a while, but I think the bulls are really starting to show their face in silver. Now, as soon as silver breaks out of this range, I'm telling you, silver's going to be off to the races. So came back up to pretty much test this level here. Came back up to test that level there. Look what happened. We pull right back down. Now we have support showing right around this 50-day and the 20-day. So be watching this carefully. And the minute silver makes a real good push well above this level, which is I say above 26 bucks would be good at good place to call it. Nice big push above 26. We're going to see silver really take off. So pay close attention to that over the next couple of weeks or so. And let's see, last but not least, let's take a look at one more, which is going to be copper. Last set of Mohicans. I like the setup in copper. It sort of kind of has the same type of setup in gold. So copper has been slowly but surely pushing into the apex to the corner of this triangle. So this is another one I'm looking for to make a move. So pay close attention to copper. We're either going to have a move up and out, or we'll have a move down and lower. So pay attention, close attention to that. If we get that move up and out, it's going to be a great move for copper. And with that said, two copper stocks that you can pay close attention to if you want to be in for play a setup move for copper. One is Freeport-McMoRan, which is a miner that also has a little bit element of gold and element of copper. And as you can see with Freeport, this is another one I've been tracking. It's already about to break out of its own triangle. Look at that. I highlighted this price action as of Friday on this weekly chart. It is about to have a breakout of its own. There's a daily chart of Freeport already starting that move out. So I think this is going to be a good place to add to some type of copper stock. Either Freeport is one, and SCCO is another. It too is starting to take some nice bounces off of the major moving averages. Nice bounce off of this 50-day, nice bounce off of this 20-day. All right, folks, those are let's look at the overall market, look at what we can possibly run into, and then give you guys a couple pointers and a couple ideas too as well along the way. All right, hopefully this is some information that is very helpful for you and that you can use. Wish you all great trading, and I will see you guys next weekend for the next market review. Have a great weekend. Enjoy the rest of your weekend, folks, and enjoy your Sunday and the rest of your Saturday.